Good morning. No reason, Alex. Just arbitrary list that I have there that what I want to look at times. I only use this page in the morning to review and then switch to other pages. So no thought process really behind it. Yeah. So pretty impressive initially here. You know, markets were down considerably on the Apple news, with it reporting and getting shellacked. So at this point, it's a little bit of a disappointment, actually, that the markets are up. From my point of view, I was really hoping that it would open lower and drop from here. And, you know, and it still may do that. I mean, it's right into the zone here, the NASDAQ futures, where the sellers are going to show up, and they're beginning to a bit here. It's still in an uptrend on the 60-minute. So, you know, the fact that it's backing off here shouldn't really be, taken too seriously at this moment. And certainly, since it's an uptrend, certain buyers come in, and this formation of this tail that's happening as I speak could just, turn back into a big green bar here. So we'll have to see how that shapes up. But to make the turn lower, assuming it's going to do that, since still in a downtrend, and it's at the turning point, typically, it's going to take another day or two. It's usually what happens as it makes the turn. And then again, this assumes that this stays as a green day. Well, if it closes below the opening price, it certainly could just head lower on Monday. But, we've got the whole weekend to deal with. And so we'll just see how this shapes up. However, it being where it is, you can see that the declining 20 coming into the flat 200 and the resistance area right here is just an obvious place where sellers are going to be, and they're taking advantage of that and this move up here. And we'll see how much Apple recovers, and we'll just see what these other markets are doing. You can see the S&P futures here are holding up a bit better, and they're pushing right up into the flat 200, same resistance area. Pretty impressive rally. So the depth of this retracement, we're going to have a weekly chart that looks pretty good. So what typically would happen from here? Well, let's go back to the daily. Ideally, the W bottom type of scenario would be ideal, but in reality, because of the depth of this retracement here, prices shouldn't come back down here, because at that point, this weekly chart, you're going to have a bar that's retracing pretty deep into this impressive reversal bar right here. So the question is, what should happen? Well, this is how we have to make adjustments from our bias, as to we're just looking at probabilities based on historical patterns. So if it shouldn't come down here and make the W, and I'm going to back off from that statement a little bit to say that, of course, that's possible. But what it should do is a shallow retracement, kind of a choppy sideways move here. What we'd be looking for next week is a continuation pattern where build an inverse head and shoulders. Well, yeah, kind of, I guess so. This being the head and this here being a higher low, an inverse head and shoulders. Yeah, absolutely. It could look like that. It could sideways. But what I would like to see is I always like to see some type of a failure pattern, meaning an attempt to go lower that fails. So what I would look for, kind of draw it out here. Let's assume it just kind of pulls back. Let's assume it pulls back here, since there's some overlapping bars in that area, give or take. Okay. So as it pulls back here, to have something, again, forgive my artist drawings here, could be something like this. And I don't know, of course, but, I'm just kind of giving an idea of historical patterns, and maybe something like this that then results in a continuation move back up to here. So we'll see whether it stops here or whether it's down here. We'll just have to see how it shapes up next week. But that would be the type of pattern that I would expect after this type of an impressive move higher. That's what we can do. This is what we do as price pattern traders, is we recognize historical price patterns and we put them in the context of what's happening right now in the moment. So as I look at something like this, historically, this is what would happen. Coming all the way back down here, of course, is a possibility, but it seems unlikely after this kind of a move. We'll just have to see how it shapes up next week, and we'll trade it accordingly. Right now, after this move higher into this area up here, it's just such an obvious area where sellers are going to be. And we'll just have to see how much they can produce in supply up in this area and how today shapes up. It is Friday. And we'll have, again, we'll just see how it shapes. And I think it probably could be, the extent of today's range. The Dow is pretty impressive as well. The depth of retracement here. And, jokingly, Alex likes to rub me a little bit about my passion for eliminating indicators and trend lines and such. So I'm just going to state what trend lines actually do, right? As to, you see this trend line here where some would, say, okay, this broke the downtrend. Well, in reality, it has not overcome major resistance. And so it's still in a downtrend, but the depth of this retracement is really what you're looking at when you see a trend line break. The break of the trend line is it really irrelevant as far as a trend change, but the depth of retracement is not irrelevant because that is what tells you the probability of a possible trend change. Because when prices rally within a downtrend, historically, they only make it to what we call minor resistance, and then they head back lower again. So that would have been how things would have shaped up for the W type of pattern. But now, because of the depth of this retracement, it's more likely to have the head and shoulders type of bottom or a sideways consolidation. And as I said, looking for that type of a failure pattern, which could be, it really could, you could get something like this as well. Like after, why isn't that drawing for me? You could wind up with something like this, which is the same as a bottoming tail bar, but it's just a red bar down followed by what we call a 180 type reversal or a red bar ignored. The message is the same. Prices went down, they went back up. So I don't need a bottoming tail bar. It could be something that looks exactly like that. So we'll see how it all plays out next week. Let's get rid of that noise and move on. Bonds are down a little bit here, just kind of chopping. And what should happen here, right? Because this is in a downtrend, it's at resistance, and you've got this bottoming tail type of reversal right there, which is, pretty obvious because it's in this support area. But because of this downtrend, what typically happens and what's starting to happen already, we'll see where this day ends, but this failure of the bottoming tail bar typically results in a measured move to the downside. So if you're a bond trader, look out for that kind of a pattern. And oil, what a nasty move, continuation move lower. Breaking through this support here. And we have to go to the weekly chart just to expand this. And so it's coming down to the next level there at around 62 bucks. And the next one is down at 60, which I think just based on it being a big whole number would be where it is going to want to go. But we are getting a range expansion, on multiple bars move down. So it's closer to making some type of a stabilization low at a minimum. But clearly this has broken this uptrend that it's been in for about a year or so, after making a new high, and it's broken through major support here now. So obviously trend has been broken. We'll see if it holds $60 or where it's going to go from there. And continues to be weak. Gold back up into resistance. No, this is a bottoming process. It came down to where it should turn. It came back up with a wide range bar, impressive reversal off of that low. So pretty powerful. Now we want to see, we go through into our factory work, so to speak. Now the process is for it to stay in the upper half of that green bar, ideally in the upper third, 25%, and some sideways action, and again historical patterns. It should then continue up from there. And just to take a look at this Apple here, and can the market really ignore Apple dropping like this? Some years ago it was, everybody, you think, okay, the market is, the big picture. But years ago, the market, Apple dragged the market around. And today, the market is ignoring Apple, which is impressive. But, that is the beginning of a turn after a correction within the market. And we'll see how other things shape up. STX, that was one of my day trades the other day. Wish I would have held on to it a little longer, but sure glad I'm not in it now. With this break to the downside, I assume earnings came out, but it initially went up and then got shellacked there. So pretty erratic type of action there. And just looking through some other things, you can see on my minder here, these ones in yellow are what's down here. There's much more green than what's down. Starbucks, I think they had earnings. Wow, impressive move up there. And so we'll see how today shapes up, and if what scenario plays out for next week. All right. So, all righty, Dan, we'll cover what we have open and some of the other gaps you're keeping an eye on.
All right, cool. Good morning, everyone. Yeah, Starbucks was one that, I've been watching for a week here. This bullish consolidation daily, and now we're getting a gap breakout. Now, all gaps aren't created the same, and we would love, we like professional gaps, that gap from consolidation, going with the trend, and don't gap too much and create a shock. So that would be right around here, 59.50 to 60 to low 60s. But it went up to 64. So I'm not going to chase it. I need a pullback. Oh, thanks, Pat. Are you going to sing for us later? We have spider put spreads that expire. One of them, no, Monday, actually, we met our target. And we have one for Friday that I sent out a telegram. Oh, let me give it to you all, because I sent this out an hour ago. Oh, I'm not sharing my screen. So we're going to go ahead and take our profits, 10-minute low, and you can already see the spiders are way off their 276 coming into the gap. And I heard something on CNBC. They were saying that when the market was up 3.25 or whatever, that 200 of that came from Trump's tweet, positive tweet suggesting, positive negotiations with China. And then they said another 100 points came from a Bloomberg report. And I have no idea what Bloomberg report they're talking about, but really don't care. And then CNBC came out with a report which chopped off 100 of these points, saying, oh, don't get too excited about Trump's tweet. We got a long way to go. So whatever, we just trade what we see the same way every day. IWM, we have put spreads that expired today, and those should be totally worthless. DACU, we have a way out of the money put spread. What else? Oh, SFIX. We're long stock here. And I'm going to keep a tight leash on that too. And that's it. We're still very light. Let's look at a bunch of these gappers now. STX, ugly gap, 40 bucks, no pattern. Let's keep an eye on it. Honeywell, I just saw this going by. It's not an earnings stock, but I like the climactic on support on the weekly. And we just need a more confident bottom here, and we'll sell a short-term put for next Friday. I didn't even look, assuming they're liquid and they have them for next Friday, that is. Caesar, bullish pre-market, 978, but no pattern on the daily. PBYI, pharmaceutical, getting shellacked. Looks like the all-time lows, but I have no interest in that. Weight Watcher, wow, do you believe, I mean, if you don't manage your stocks, then you're going to be in pain. Look at this. This was over 100 bucks, and now it's 57. That's an ugly gap under all this. So I have no idea what that's going to do. Yen, 21 bucks, gapping up here. KHC, 52.67, a bearish gap. I'll watch that for a bearish continuation. IBM, also, if it can give us more signs of a reversal, that'll be a put spread. So with the sell-off, volatility has increased. No pattern yet. MT, I don't know if it's earnings or not. I just saw the gap. Just keep an eye on that. Duke had energy, 83 bucks, no pattern. XOM, 82.14. It's up 3 bars here and gapping to resistance. I have no interest. See VX. Now here's a